Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about VITASOY INT'L latest report. VITASOY International Holdings Limited offers a diverse range of businesses and services, including manufacturing and selling food and beverages, operating tuck shops and catering business, distributing beverages, exporting soy-related products, investing in properties, selling products through distributors and retailers. The company's product portfolio includes soya milk and other plant milk products, almonds, oats, soybeans, tea, water, juice, tofu. Unfortunately, I don't have access to the extracted summary. However, I can provide a general essay on what could cause a stock price drop. The VITASOY International stock price has significantly dropped in the past year due to several factors. One major reason is the decline in sales revenue, which may be attributed to increased competition from rival brands and changing consumer preferences. Additionally, the company's failure to innovate and adapt to new market trends has also contributed to its declining performance. Furthermore, VITASOY International's financial statements have shown a decrease in profit margins, indicating inefficiencies in its operations or supply chain management. This could be due to rising production costs, inefficient distribution channels, or poor inventory management. Another possible reason for the stock price drop is the company's failure to expand into new markets and geographies, limiting its growth potential. The lack of diversification in its product portfolio has also made it vulnerable to fluctuations in demand for specific products. Lastly, external factors such as economic downturns, regulatory changes, or global events may have also impacted VITASOY International's stock price. However, without access to the company's financial statements and market data, it is difficult to pinpoint the exact cause of the decline. The primary drivers of revenue growth or decline are largely influenced by regional market conditions and company performance. Revenue growth is primarily driven by strong performances in Australia, New Zealand, and Hong Kong, where new product launches and market leadership have contributed to increased sales and profitability. In contrast, revenue decline is mainly attributed to softer market conditions in the Chinese mainland, negative impacts from tariffs imposed on North America business, and intense competition in Singapore's imported beverage market. Temporary setbacks in Hong Kong operation also contributed to revenue decline. Net income and profit margins overview. The company's net income experienced a decline of 4% compared to the previous period. This decrease is evident across all operations, except for the Hong Kong division, where no change was reported. Profit margins also underwent some changes. The gross profit margin saw a slight drop of -0.5 percentage points, falling from 51.6% to 51.1%. However, the operating margin remained steady at 7.6%, indicating that despite the decrease in net income and gross profit margin, the company's operational efficiency was maintained. The reasons behind these changes are not explicitly stated in the provided summary. The company's operating cash flow. A mixed picture. A closer examination of the company's financial summary reveals a contradictory picture regarding its operating cash flow. On one hand, page 4 indicates a negative operating cash flow with inflows of $273,958 and outflows of $228,530 in 2025. However, page 18 suggests that the company is actually generating positive operating cash flow. This discrepancy raises questions about the accuracy or completeness of the financial data provided. The company's financial summary reveals mixed results across its various segments. Notably, the Hong Kong operation and the combined Australia and Chinese mainland segments performed well, contributing positively to the overall revenue and profit of the total group. In contrast, the Singapore segment reported a loss from operations, indicating underperformance in this region. The lack of specific data on other regions or segments makes it difficult to assess their performance. However, the strong showing by Hong Kong and Australia/Chinese mainland suggests that these areas are driving growth for the company. The management's outlook. Focusing on innovation and growth, the company's management is optimistic about its future prospects, highlighting two key areas of focus. Firstly, they plan to continue enhancing the product and packaging portfolio, aiming for improvements that will drive growth and competitiveness. Secondly, they aim to boost commercial execution in China by introducing innovative products and pricing strategies, which are expected to increase market share and revenue. The company's financial summary reveals that it has a history of paying dividends to its shareholders. This indicates a commitment to returning value to investors through regular distributions. However, there is no mention of share buybacks in the provided information. That concludes the financial summary for VITASOY Intel. Feel free to comment below, and I will be happy to answer them when possible.